Welcome to Finances with Felton. My name is Jeremy, and today I wanted to talk about the all exciting taxes. I know, super exciting. Everybody loves taxes, right? So just bear with me. I understand it's taxes. Nobody likes taxes, but it's extremely important that you do understand them and it can help you in your future endeavors and the way you manage your money. So, like I said, please just bear with me. If you have any questions or comments, please leave them down below and we'll get started. Taxes. What are they? Taxes are simply the money the government takes from you, from me, from businesses, and that's the money they use to build hospitals, to fix roads, to pay for basically the things that make the country work better, we hope. But that's in basic what taxes are and what the government uses them for. So, income tax. That's the big one. This is what you pay for earned income and profits. That's what an income tax is. What about sales tax? So that's a tax on any goods or services that you might use. They have a certain tax for that. Property taxes. If you own a house, you own property, you are paying taxes on that property or real estate. If you have any type of business that you might own, then you are going to pay your corporate tax, which is imposed on the profits of whatever corporations there are. There is capital gains tax, tax on profits from the sale of any assets like a stock or real estate. Then you have your payroll tax. That is a tax that's deducted from your employee wages, and that is like Social Security or Medicare. You also have excise tax. Just like you paid that sales tax, you have excise tax on certain specific goods like fuel, alcohol, tobacco, etc. That is a separate tax, but is also added. So how do taxes work overall? And again, this is just in general. So taxable income. Individuals like myself and you and other businesses have their taxes calculated depending on what the tax laws are. So this can include wages, profits, capital gains, and other sources of income that come in. Then you have the tax rate. The government has set tax rates which can be progressive. So higher earners pay more taxes. That's the way it works. So the different types of income or goods may have different tax rates. There are 7 federal income tax rates currently in 2023 and next year, 2024. So the first is 10%, then 12%, then 22%, 24%, 32%, 35%, and finally 37%. So your taxable income, like I just talked about, is your filing or determines your filing status and which rate applies for you. So depending on how much you make is how much you are going to pay. The US federal tax rate will remain the same for 2023 and 2024. 2025, things may change. Depends on what is voted in and what happens. So the Tax Cuts and Jobs Act is done in 2025. So the Tax Cut and Job Act of 2017 will be over in 2025. So there might be some difference in these numbers in the coming years. Something to pay attention to, because again, it can help you determine where you want to be. So, filing. Please, please file your taxes. You would be amazed at how many people don't file taxes. You have to file taxes, so please don't forget. You can get extensions if needed, but please, please, please always file your taxes. Okay, so now let's look at the 2023 tax brackets. As you can see on the left side, it tells you your tax rate, and then single, married filing jointly, married filing separately, head of household. So you can figure out where your tax rate is. How much in total are you going to make for the year? Say you make $100,000 a year and you're married and you're filing together with your spouse. So say you both make $50,000 a year. So combined, you have $100,000. So understand that not your whole $100,000 is going to be taxed at the 22%. It will not. Only anything over 89,451 and above is taxed at that 22%. Anything under that is taxed at the 12% up to the $22,001. So that is going to be taxed at that 12%. And then under that is taxed at 10%. What does that mean? Okay, looking at this, we have the 2023 and 24 tax bracket for married filing jointly. Look to the left, you see the tax rate, then the taxable income. That's where you are going to be. So figure out how much money you made this year and figure out where you're going to be at. And then it'll tell you the taxes you owe. So 10% of that $0 to $22,000 is going to be $2,200. You can see that in the taxes owed. So you're going to have $22,000 plus 12% of the amount you make over that money. And then same thing, add the $22,000 to $10,294 plus what 22% of whatever you made over the $89,450 for 2023. And then you see it is going up next year. So the tax brackets will be up higher for next year. So just take a look at this. You can pause it if you need to look at it further, or you can always look up this stuff online. But just so you know, you're not paying the full amount you have. It's going to be broken down into these percentages unless you only make $22,000, then you'll just be in the 10%. Now I wanted to talk about tax deductions and tax credits. So tax credits can reduce your tax bill on a dollar for dollar basis. So if you owe $10,000 in taxes, but you have a tax credit, you might owe $100 less because you have a tax credit of $100. I hope that makes sense. Tax credits, I have a $100 tax credit. I owe $10,000. Now I owe $9,900. That doesn't change what bracket I am in. So tax deduction, on the other hand, could reduce how much your income is subject to those taxes. So it can reduce the amount you're going to owe because now your taxable income is lower. So if I gave a tax deduction for $1,000, I saved $220 if I'm in a 22% tax bracket because I saved that $1,000 with a deduction. Now I lowered it, so I'm not paying that $220 for that taxable event because there was none. I had a tax deduction. So tax deduction lowers your taxable income. A tax credit gives you a dollar for dollar back on whatever you're going to owe, regardless of wherever your tax bracket is. So just take all the tax deductions you can claim, because that can reduce your taxable income and put you in a lower tax bracket possibly. So if we went back to that $89,000 and say we made $90,000, just that tax deduction of $1,000 now puts us squarely in that 12%, and I have no money that's in that 22% tax. All right, just to recap a little about everything we talked about today and hopefully some important points. So remember, tax deductions and tax credits, these can reduce your taxable income or your actual taxes owed. Your tax brackets are going to be different income ranges and are taxed at different rates. Always remember to file your taxes. And please, if you need to consult some tax guru, I am not a CPA by any means. This is just an overall to help everyone out. But understanding your taxes is going to help you as an individual, as a business owner, and it will help you either ask questions to that CPA or someone that is smart in taxes, and you can have an understanding of what you're doing and how you can change your financial perspective on taxes. And I just wanted to think about all this tax information and the upcoming elections of next year. We're going to have a new president, and there could be some tax changes, as there always is. But just remember, the most greenest president of our time, well, had to be all the Bushes.